everybody. Thank you guys for tuning in to Canadian Mortgage Weekly. If it's your first time here, welcome. We typically go over some cool mortgage information, look at some facts, articles, just chat about things that you ought to know from a mortgage broker at 10:30 every Wednesday. So, of course, as always, we are joined by Joe Bladdock this morning. Joe is a mortgage broker in the Barrie Simcoe area. He's been in the business for just over 10 years, so extremely knowledgeable, and yeah, always brings a lot of information that most people don't even know about. So it's exciting to have Joe with us today. How are you doing today, Joe?
Hey Sam, thanks for the great introduction. And yeah, I'm doing pretty good today. Yeah, it's a nice day today, and really looking forward to doing this 8th episode now this year. So really excited to chat about some of the articles that we'll be talking about today, and some more information later on in this presentation about what upsizing and all that. But yeah, thanks for the great introduction, Sam. I'll just back at you. Thanks for joining us here. Sam Thompson is a mortgage agent with Mega Mortgage. He's been in the business now for just over a year, so that's awesome. And Sam's married, lives in Barrie, Ontario, and we work to help our clients together in the Simcoe County area as well as all over Ontario. So Sam, how are you doing today? Good to see you today as well.
I'm doing good. Yeah. It's wild that it's our 8th video. We've been doing this for 2 months consistently, which is really cool. It's a cool cornerstone, but also shows you how fast the time flies by.
It really does. Yeah, it's flown by. I can't believe it's already almost the end of February, and we're leading right into March. And yeah, the time really does fly, Sam. It sure does. And with what's going on in the market, it seems like it being so busy in the market. There's always people calling because it's so active, and that just helps the time just fly by as well.
Yeah, absolutely. I mean, again, as you were saying, I've only really been in the industry for a year now, so I experienced my first January, which, as I understand it, was busier than a typical January for mortgages.
It was, yeah. Usually in January, we come off of New Year's, and mortgage brokers, mortgage agents spend their time planning the year and kind of setting up for the new year. It's pretty slow usually, but this year, right off the bat, we were getting calls about refinances because the rates were so low, and as well as purchasing a bigger and better home to upsize because the rates are so low.
Absolutely, yeah.
Yeah,
it's
been really busy.
Yeah, there's been a lot of interest in the last few months. And of course, before we get too far into things, I do want to comment on the contest that we will be running through all these videos. Again, if you've been in any of our previous videos, you understand that at the end of each video, we go through all of the comments and shares from the previous week's video, and we do a draw for a $25 Skip the Dishes e-gift card. So it really is a win-win because you can even comment a question, and Joe and I would love to go through the question, chat about the answer a bit. Plus, it also counts as an entry into the contest. So if you're tuning in today, feel free to share or just comment a question, comment, hello. We'd love to chat with you guys and love to see you win that gift card.
That's right. Sam, thanks for reminding me of that. Absolutely. Get your comments in, your questions in. They all count towards an entry. We want to give away the $25 Skip the Dishes or DoorDash card so you can get takeout food and just enjoy time under stay-at-home orders. Although now that we're in the red zones, Sam, maybe we should switch it up going forward. Maybe people won't be eating in as much anymore.
That's true. Yeah. Now that you can do it in person, we might just need to get
we'll have to see about that.
Card.
We'll have to see about that, or at least maybe like a restaurant or something. But in the meantime, any questions you have or comments, leave them below. We'll make sure that Sam does the draw next week for seeing who the winner is. So we'll do that draw later today. But yeah, getting back to the market, Sam, the rates are remaining low. And I'm seeing a lot of folks wanting to refinance because the rates are low. And also a lot of folks are calling me because rates are low and they're thinking, well, how much does it really cost to get into a new home?
That's right. Yeah. Yeah. There's a lot of question about that of, is it worth, especially if you're somebody who has locked into a 5-year term, is it worth breaking the mortgage, paying a penalty for the lower rate? Lots of questions around rates these days, right?
Yeah, there sure are. And the questions, just thinking back as to what the most frequent ones are, and that is, what they are always looking to, like, everyone's looking to see what they pre-approve for when they get a new home, right? And what most people are surprised in finding out is that the prices, like when they get pre-approved for that new and more expensive home, the payment's staying the same. So that is something that I'm really excited to pass information along, because breaking that mortgage, like you're saying, Sam, sometimes there's a penalty. Whether it's worthwhile or not, sometimes you can move up $100,000 or $200,000 in home and you have the same mortgage payment by taking the lower rate.
Absolutely. And when you factor in the fact that you can again lock in these, low rates that we're seeing now for another 5 years, it really helps sustain, again, that exact same rate for a more expensive home for the duration of your 5-year term.
Exactly. But before I have a little bit of some numbers to share with everybody about all this. But before we get into that, there's been a lot of buzz in the news right now about mortgage rates possibly going up in the future. I'm sure you've seen that and heard that as well, Sam. Maybe you guys have heard that out there. And we wanted to take some time and debuff that, or debunk that is the right word to use. I've just read the most recent one today. They are saying that rates will eventually go up. There's no question about that. But what the language they are using, it's almost making it seem like you need to do this now because the mortgage rates will go up tomorrow.
Right.
But in that article, it's written by Rob McLister, who is the founder of RateSpy. He mentioned that, he doesn't see fixed rates going up anytime soon in any big scale, because it's just normal fluctuations in the market, saying something about how the US economy is doing well and there's some stimulus being voted on right now, and that's why the rates may be inching up very slightly.
Right.
But there's a lot of talk saying that that's going to be an eventual thing, and that we're just preparing ourselves for that eventual thing. It's not happening anytime soon.
Right.
Yeah.
And that's very reassuring, because as some of the previous videos we've done as well, we've talked that, there's a lot of articles that try and stimulate people by saying rates are going up. They're just, speculating on, again, future events or events that might, not even take place, or there needs to be 5 things that happen in order for the market to crash and the rates to go it's good to clarify that it's going to be gradual, and it's not like next month we will see rates jumping back up to where they were.
That's right. It's a good point. And while you were just mentioning that, I just wanted to do a few shout outs. I see in the chat that we have a few people mentioning that. Yeah, we have Alex there. Hey, Alex, how you doing today? Thanks for joining us today. Good to see you. I think we got some more people there. Sam, do you see anybody else there?
Yeah, we have a comment from David, again, saying good morning. We've seen him out the last few times. He's also saying you look like you need a guitar, Joe.
I do need a guitar, but I'm at work right now, so I gotta keep it professional. Maybe we'll do a guitar song once we hit 50 views or something.
That's right.
We'll get there eventually.
Yeah.
But there's a question here coming from YouTube there. I can't really see it there, but can you read it there for me, Sam?
Yeah. So it looks like it's saying, I'm in the US, building new. do you think the rates will jump drastically?
It's a great question. So thanks for the question. Badu Baby, I believe it is.
Yeah.
And I'm a Canadian mortgage broker, Sam. I'm not sure if you have any more insight, but from my perspective in Canada, we lean a lot on our fiscal policy on the US Fed. And right now, the US Fed has signaled that the economy is doing really well right now down there, and that the stimulus package will jumpstart the economy, similar to a lot of previous data that has shown in previous jumpstarts. And if that happens, the rates may go up, but I'm not sure they will go up drastically, because for them to go up drastically, it's really going to shock the housing market, whether it is in Canada or the US. So I don't know about you, Sam, but I'm thinking that if they do go up, it's going to be slowly and marginally, and only if there's evidence that the economy is rebuilding itself. And that's usually when they raise the rates.
Yeah. I would completely agree that, again, it's going to be a gradual process. It's not like we're going to wake up tomorrow and rates are going to be back up at, you know, where they were this time last year.
Exactly. Great question, though. Thanks for the question from the US. Appreciate that. It is hard to comment on that, though, because we are Canadian mortgage professionals. In the meantime, though, I'm thinking we can launch into our presentation, and I can chat about some of the data. In the meantime, Sam, can you remind everyone about the contest?
Absolutely, yes. So just as we saw, you can leave a comment in the form of a question or just a good morning, and that is actually counting as an entry to our draw that we will take up at the end of next week's video. So you also do have from today until next Wednesday to comment on this video below or even share it. And that will count as an entry to a draw to win a $25 Skip the Dishes e-gift card. So if you're watching or during Joe's presentation, if you have a question, please drop it in the comment section. We will review the questions as well as enter your name in the draw. And stay tuned if you commented on last week's video, because we will be doing that at the end of today's.
All right, thanks very much, Sam. So I'm gonna just get into my presentation here. Let me just share my screen. Let's get the PowerPoint here. Whoop, I don't want to end the meeting. I want to share the screen. And can you see that, Sam, there? Can you see the full screen presentation?
Yep, looks great.
Awesome. Great. Thanks very much. So what I wanted to do today is, what I've done with Sam here is we've broken down some numbers for you all in terms of how much what will it cost you in today's market to actually upsize from your current home to a more expensive or bigger home. And this video will help you if this is something you've been considering for the last few years and you want to take advantage of the recent increase in market value, or this is something if you've bought recently and you want to take advantage of the lower rates to upsize. So let's go through an example together of a house purchased in Barrie from February of 2019, because that follows with our mini series that we started last week from how these mortgage rates will impact homeowners. So yeah, just looking here, Sam, what I wanted to just show everyone is, let's look at Jill and John. They purchased their home 2 years ago in February 2019. Obviously, the names are protected for identity, but let's review how they will upsize for their needs. So typical example I saw on February 19, 550 purchase price. They had 440 mortgage because they put 20% down, and a monthly mortgage payment of $2,229.43. Pretty standard. And let's look at where they are today. Okay, so now their market value has increased to $760,000, and that's based on the data obtained from the Barrie District of Realtors there, Canadian Real Estate Association as well. And the mortgage would be down to $412,851.73.
Wow.
And obviously that's using our recommended way of paying your mortgage, and that's doing bi-weekly payments. Yeah, pretty crazy, eh, Sam, how the market value has increased so drastically in the last 2 years.
Absolutely. In just 2 years,
Yeah,
that's quite a jump. And even looking as at the example of 2 years ago, February 19th rate was 3.64 is also
exactly.
something to really illustrate where the market is at today, given that, in 2 years, it's almost half of what it was back then.
Exactly. So obviously, Jill and John have questions about where they are at, where they can go, because this is a lot of information to handle. So when we take a look at a file like this, we'll go through with the client and just see approximately what their market value is. So it's 760,000 here. Then we'll go through just helping them understand what their closing costs are on the sale. So that's things like real estate brokerage fees, legal fees, mortgage amounts remaining, and possibly a penalty if you are willing to pay that penalty to get a better rate right now. And we'll discuss that in just a few minutes. Sam, I want to just show everyone how getting the better rate really impacts everyone here. After you sell and pay everything off, you're left with about $300,000 from buying a house 2 years ago in Barrie.
Wow.
300,000, well, $296,708.27. Obviously, it's we want to be specific here, but then let's look at what happens when you take that and get a pre-approval now on a new home.
Right.
Yeah. So as your mortgage professional, we'll look at your situation and we'll ask you, out of this down payment, how much do you want to go down and how much do you want to keep for yourself? But in this example, I've assumed that we'll put a down payment of $270,000 with closing costs of $16,975. That includes things like land transfer tax and legal costs.
Right.
Gives you a mortgage of $630,000. So the mortgage now is over $200,000 more, and they're buying a $900,000 home.
Wow.
Let's take a look at now what the payments will be. So for this nice new home with all the land, monthly mortgage payment $2,276.34, which is pretty awesome. And then when I recommend, if you're buying into a higher priced home, I recommend going with a non-accelerated biweekly payment when you first get into the home, and then accelerating it shortly after to help jumpstart paying down your principal faster. But the main point of this whole presentation, Sam, is that a lot of people are calling me and they're asking, how much more is it going to cost me if we want to upsize?
Yeah.
Well, from going from the house that you bought in February of 2019 at $550 to buying a house in 2021 for $900,000, you'll have enough left over for a hot tub. Forgot to mention that.
That's right.
But the mortgage payment will only increase $46.91.
Wow. That's wild. And that's, again, something that we've been talking about, that a lot of people don't realize they can do when they're seeing these low rates. They're wanting to know, what their equity can get them in today's market and today's rate. But the fact that it can be worked out to exactly what they're paying now on, a $900,000 home, which is almost double the value of their original home that they bought back in February 2019.
Exactly. It's a huge realization for a lot of our clients, and they are just shocked when they see this information. So, if you're considering upsizing, it's really a good time to do that because rates are so low. A lot of people are saying, well, the price is high on the purchase, so I can't really find a good deal. But in this situation, we're assuming that, and the folks are still coming out well ahead of where they were at before.
So in this illustration, you've used 30% down. Would you recommend clients that are looking at doing this sort of an upsize, would you recommend them putting as much as they can down, or,
a great question.
Yeah.
Yeah. And I do see I made an error on my slide. The title says 20% and the caption says 30%. So it is actually 30%. And I always suggest, it's good to keep a little bit left over for an emergency fund, number one. And number two, it's good to have cash left over for any renovations or improvements or upgrades you want to do immediately. When you move into a home, it does cost a lot of money for things like curtains, blinds, septic tanks, if that goes, or things like just finishing a basement or something like that if you desire to do that, or upgrading a bathroom. So in this situation, Jill and John wanted a hot tub, so they have $9,733.27 left over for their hot tub. And
Right.
you know what? When you're in Canada and you're in these crazy winters, it's nice to have a hot tub to jump into.
That's right.
Yeah. Do we have any additional questions right now? I would want to make sure that we are answering anyone that is asking about this illustration.
Nothing from the chat at the moment. I will monitor that to make sure that if anyone
Great.
has one, we can go through it.
In the meantime, I'll just end this off by saying, if you are looking to make a move possibly this year, call your mortgage professional. Myself, Joe Bladdock, and Sam Thompson are available. Call Terry Lynn as well, and we can set you up with the mortgage pre-approval you need and an idea of how it will all break down when you actually sell your home as well. So in the meantime, I think we can move on to the draw.
Yeah, that sounds good. I think everyone's earned the right to know who is winning an amazing gift card, and it looks like you've got the snare ready to go.
Yeah, got the snare ready to go, and was playing it last night. Sounded pretty good. So let's got it all tuned up. Well, I don't know. I did play with it last night, so it might not be tuned up. I had to turn the snares off, so let's turn them back on. You got the draws ready?
Ball.
All right, let's do this thing. 1, 2, 3.
David Beezer.
All right, congratulations.
Congrats.
David, thanks for playing last week. Also, make sure that if you are looking to enter into our $25 giveaway, enter a comment or share the post between now and I think 6 days from now, right, Sam?
Yep.
And then we'll make sure that we include your name in next week's draw. So next week we'll be completing our mini series on upsizing and seeing how this all these mortgage rates and everything impact our buying power and our mortgage power right now. And then Sam, you might have some news about a special guest next week as well, right?
That's right. Yes. So in conclusion of the mini series, when we're chatting about upsizing, we are looking to get a secondhand look at it from a real estate perspective. So again, stay tuned for next week, and we should have a special guest giving us a third-party view, not from the mortgage side, but from the real estate side. So it should be a good week.
Awesome. Thanks very much, Sam. Thanks for everyone watching the episode today. If you have any questions for Sam, myself, or Terry Lynn, please leave a comment below. Like our video if you want to see more of this, and help share what we're talking about by helping send this video to someone you know that's looking to buy a home today, so they can know what's going on in the market. Okay, great. Well, thanks very much for watching, everybody. We'll see you next week.